A bad thing?
It's going to bring, as an economist, prices get high, construction responds, supply increases, prices come down. That is a likely outcome in many places.
How much more could you see prices coming down?
Well, I mean, I don't know, because, but I would guess, just look at what happened, some extreme cases in the last cycle. Los Angeles, from 1990 to 97, lost 40% of its real value. And this boom was even bigger than the last boom that preceded the 90s.
But yet you're still saying there's a lot of demand out there.
Well, I think we need to be real careful what we say about prices, real prices, nominal prices. Let's just talk about the price of a home, because real prices have gone down before, whether it's stocks or real estate.
It's part of the cycle.
It's just part of the cycle. But what's happening right now is that you can't sustain double-digit price growth forever. You have to come down. We all said that last year, and we are coming down. It's healthier for the marketplace. It will end up, we are ridding ourselves of the speculative investors. These interest-only loans, they got way too high in terms of a market share, and that introduced an element of risk into real estate we've never seen before.
All right.
I think we will be healthier by the end of next year, and the real estate markets will be better positioned.
All right, gentlemen, we'll take a break here. We'll come back, continue our conversation here. We'll get the audience here first crack at talking to the experts, and you at home can get in on it as well. Our email address tonight is survivalguide@cnbc.com. Here's what else is coming up.
Getting personal. Is your home price totally out of whack, or are you living in a new value market? We'll show you. Plus, how some home builders are acting differently to get you to sign on the dotted line. And finance guru Susie Orman is in the house with a survivor's guide on taking matters into your own hands. And is now the time to pay down your mortgage?
Your CNBC Survival Guide. Real estate. What now? Continues. Here again, Bill Griffith.
Welcome back. Now we're going to take a few questions from our audience who are with us this evening in just a moment. But first I want to get your thoughts on a few long-standing real estate myths, fact or fiction. Now, I want to show of hands or stomp your feet or whatever you want to do here. In the long run, especially in the coastal areas, land is always a better investment than stocks because, after all, there is only so much land. How many agree with that statement?
I agree.
Okay, hands down. How many disagree with that statement? Okay. Fact or fiction? Lenders don't lend to people who cannot pay. How many believe that statement? Show of hands. Okay. Hands down. How many don't believe that? All right. Tom Kuntz of Century 21. That is one of the first one is one of the arguments that real estate agents always make. You should buy something, especially if it's waterfront property or, prime piece of land, because they're not making land anymore.
Well, Bill,
is that a true statement, really?
I don't think that most agents say that. I think what most agents do, and it goes back to the basic fundamental belief. Most people buy homes for shelter, to live in. Not most people don't buy homes just for investment. They make money on their homes as they go up. But primarily a home is bought to put your family in and live in.
And Bob Moulton, Americana Mortgage, you don't lend to losers?
There's a loan out there for everyone, and it's based on credit score. The better your credit, the better your rate. The lower your credit score, the higher your rate. And there's more risk associated with those loans where people don't pay. So lenders will lend, but you're going to pay a little higher rate than someone who did pay on time.
Well put. He's answered that question before, I can tell. Welcome. What's your name?
Giovanna Mangioli.
What's your question?
What role and responsibility has the media played in enhancing the real estate market over the past few years and now in slowing it down and the retraction of the market?
Okay, next question. Who wanted to ask it? What role do the media play? Bob Schiller. Everybody wants to answer that one. Okay.
I think the media played a significant role.
Really?
Because I think you have 7 out of 10 Americans that own a home. Everyone wants to know about their real estate. I don't think 7 out of 10 Americans own stocks. So everyone wants to pay attention to real estate. In all due respect, the media has been focusing on real estate pretty heavily over the last 12 to 24 months. And when they hear that word bubble, sellers get concerned and they want to put their house up real quick to make sure that they get their price.
Is this the first financial bubble, if we want to call it there? Is this the first time we've ever seen an upcycle in real estate? No. Is it the first time we've ever seen a down cycle in real estate? No. And you've had it even before there were media, don't you think? I mean, you had, if you want to talk about manias, tulip mania occurred in the 1600s in Holland. I know you were going to bring that up, right?
Because the Dutch invented the newspaper just before the tulip mania.
Oh, fine. You know, your point is well taken, and we could spend the whole hour on it, but show of hands. Go ahead.
With respect to the media, the Wall Street Journal, if I remember correctly, about 4.5 years ago had some headline about the real estate market, the expansion, the boom, was going to bust. And if people had listened, if people on Main Street listened to the people on Wall Street 4 or 5 years ago, they would have been out the $5 trillion they earned in excess wealth, in wealth gains from their own property ownership.
See, they don't even listen to us. They don't even listen to us. Your name, sir?
Nestor Rios.
Nestor, what's your question?
Yes, in relation to the real estate market in general, will it be a soft landing or a hard landing, and will it be area or region specific?
Okay. Bob Schiller, you want to go first?
It will definitely be region specific. As you say, Cincinnati is not high on my list where it crashes. But I'm not sure that it will be a soft landing. I think there's way too much confidence.
How do we know the difference between a soft landing and a hard landing?
There's so many people say that it's going to just return to normal. But you got to remember, prices have gotten very high, and we have a psychology that can't last.
David?
I totally disagree. This will be
I thought you might.
Yes. This will be a soft landing. Now, it may not be a soft landing for every local marketplace across America. I can't guarantee that. But it does depend on the local economy. The difference between this real estate cycle and the previous real estate cycles where we've had contractions is that this one still has a healthy local economy. The economy is healthy, it's creating job gains, and because of that, it's going to be very difficult to concoct a scenario where you get prices tumbling because people still have the financial wherewithal to purchase these homes.
So as long as jobs are good.
The real estate crisis brings on the recession. That's what we just heard Rosenberg. And that's an interesting possibility.
As what's happening right now in the real estate markets is we're going from a seller's market to a buyer's market. When you do that, the seller gets very stubborn at first. So he keeps the price up. When that price stays up, the days on market lengthens and the inventory of homes expands. That's why you're observing all these excess inventories of homes. But the pent-up demand is there. And as the seller begins to bring that price down, there will be pent-up demand because the financial wherewithal is there. All the households, the boomers haven't gone away. They're still there. They still want to purchase homes. The immigrants still want to purchase homes. So I think the price adjustment will be very quick and fast.
All right. We have email coming in. We have one from Charlie in Elkhart, Indiana, who says, "Help me survive. There are so many numbers out there about the housing market. I'm confused. Which ones should I trust?" Which ones do you guys follow? Tom Coons?
Bill, I think there's never been a better time in the last few years that an individual who is actually interested in looking at buying or selling a home needs to get professional help. They need to get people who have been able to go through these types of markets and understand how to help guide the individuals to the type of home that they're looking for, and to link them up with some professional mortgage people who understand. Because he's absolutely right. There is a mortgage for every type of individual that's out there, depending on how long you're going to stay in the home, how long you're going to, if you're going to get out.
Point well taken, but if you want to figure out for yourself where we are in this market, which number? You got housing starts, you got permits, you got.
I think if you're talking about a home buyer, that home buyer has to get very educated on the specific area where they're looking to buy.
So the big numbers, the national numbers, don't mean anything to the local buyer.
I think they need to look locally, you know, at what's sold, how much it sold for, what type of house it was, and compare what they're seeing by homes sold to what they want to buy. Taking that information will help them make the right decision.
Very quickly, Professor.
The Chicago Mercantile Exchange has created futures markets for single-family homes, and in most cities they're predicting a decline, the futures markets now.
There you are. That's something we should pay attention to.
That's a market forecast.
All right. Well, we're going to take another break here. We'll come back still